Okay, we're delighted to have Don and Mike here, who are going to take us through the changing business aviation landscape without mentioning the words SAF or offsetting. You can if you want. Don, take us through your history. How did you end up in a short version, how did you end up in business aviation?
I was lucky enough to learn to fly as a young guy. I owned a small company that I didn't want to own, and I learned to fly and wanted to be in the business. So I got in. I first started selling Moonies and then Hawker Beechcraft, and came up through that company, and now Guardian Jet with my brother, and we're a consultancy and a brokerage, and it's going okay.
Mike?
So I actually entered the aviation industry sort of midstream career. I was in another industry before, and I had two very significant influences in my life in the aviation. One is the guy sitting next to me. Don actually taught me how to fly about 30 years ago. And the second is Ken Rickey. He and I were roommates at Notre Dame, and of course Ken's the chairman of our group of companies, Flexjet.
And Flexjet has come over to Europe.
It has. We're officially launching this year in 2020. Marine Eugene is our leader, and so we'll kind of come out at eBase this year.
Okay, but you've given it to us early. That's nice. Okay, how was 2019?
Well, 2019 for Flexjet was fantastic. I would tell you we're on about a 5 to 6 year run, Alasdair. Last year, our new transactions, our new sales, people that came into our business was up 28% year over year. And 2018 was a record year for us, and 19 beat it by 28%. So I would tell you, for all the people in the room, fractional is alive and well, and we're gaining market share in that space.
Don?
You know what, I'm just going to say, as a rule of thumb, we're way more upbeat than the morning's gone, because just so that no one jumped out of the window before lunch. But we had our best year ever. We were up 15% in revenue. Our profit was up a little bit. We have a growing company, so I think we sort of masked what was going on in the resale industry. But it was great for us. We have a few different market segments. Our consulting was way up, which is usually a precursor of good things happening in the long term, like swapping fleets out in the US or buying airplanes around the world for our customers. So the consulting being up was positive. Our new aircraft buying was up. I know we buy more represent more purchases of new airplanes than anyone else. So 20-some airplanes last year. That was really significant to our growth. And then the resale business was up too, so it was good.
So it's interesting because we've got whole aircraft sales, partial hours. You also have a large charter business. Are you seeing anyone shying away from ownership? Or more than before?
Yes. I'll tell you what I've seen is a trend. I've seen corporate flight departments who are being a little bit more thoughtful about how they deploy their capital. Not doing away with an aviation department, but maybe choosing, rather than buying the 4th plane or the 5th or whatever the size of the fleet is, that they can buy a significant share with someone like Flexjet to supplement what they currently have. And also for different missions. Remember, whether you're based in London or New York or Van Nuys, our model is a one-way model. So if you have multiple locations, you're only paying for the trip between point A and point B. So I think corporations are being very, very thoughtful about utilizing a shared solution like ours to supplement what they currently have in their fleet department.
I'd echo that. Our consulting business is very much about the proper use of capital. And so one of the big changes, if you saw kind of a macro level in the industry this year, I wouldn't call it consolidation, but I'd say in the bigger operators are winning, the globally branded operators, whether it's Flex, some of the other ones, Global over here. We've seen that grow really well in the United States, really, really high-end service. So we're seeing that grow because it's a good use of capital. If you think about what's happened to residual values and how quickly residual values they're falling away quicker. They've actually stabilized for a couple of years, but over the last 10 years, they've almost doubled residual value loss per year. Well, that means that the bar changed for us from at 200 hours, we used to say you should own your own airplane. Well, that's up 20, 30, 40% in some cases, where now you've really got to fly more to justify the whole airplane.
So how do you feel about residuals as someone who owns aircraft and it may be pushing people into fractional?
It depends upon the model, Alasdair. So you have to buy the right models. I feel like at Flexjet we've chosen great models from our partners from Bombardier and Embraer and Gulfstream in each of the categories of the aircraft that we want to fly. So it really depends upon how you utilize them and the airplane that you choose.
Okay, question from front row.
Don, what are your thoughts on inventories? You've painted a rosy scenario, but are inventories declining? And then are you, the guardians and mentees, becoming basically sales forces for the OEMs and the like?
Yeah, somebody accused me of one of these things of shilling for the OEMs, and that's not the case. Of course, my background is with an OEM, so it's a place that I think we can add value when our customers are buying airplanes. I always say my happiest customers buy new airplanes. So, and there's a segment of the population that wants to buy new. Of the 21 or 22 airplanes we bought last year, I promise you at least half of them, and probably a much higher percentage, looked seriously at used aircraft. It's just last year was the perfect storm of residual stabilized, and you had new aircraft pricing. It was lower, but it was disciplined, so people weren't giving away airplanes. I mean, across the board, the OEMs are behaving with discipline, I think. So, it's a perfect storm to buy new airplanes. We think it's out there this year again. So we think there's, but I won't say that we don't steer anybody towards what we want them to do. We just use the math. And for some segment of the population, for us, mostly large corporate operators, here Shell buys new airplanes. In the US, it's quite a bit more corporate. Our high net worth people, we're not in, even though I think most of the OEMs, half their business is high net worth, our high net worth people tend to enter the marketplace at a used airplane. 20, 30, $40 million, but used.
And the inventory issue, or have you seen it?
Inventory, it scares me right now. A lot of you guys know Jimmy Jacobs. Had a really interesting conversation with him last week, and he was kind of saying, "Slow down, Tiger," because we're growing still, and part of our growth is doing inventory deals. And he had a great comment. He said, asset values go up and down, but debt stays exactly the same. You always owe it. So when we get into the inventory business, we're looking for partners now. We partner regularly with AbPro and Jetcraft. There's a couple other guys out there where we'd rather partner with somebody who's really good at that business. But in a lot of cases, it's the best thing for our customer that wants to trade in an airplane. The risk makes me nervous. Mike,
are you a sales force for OEM?
Absolutely. Think about it. I mean, I'm selling, the representative of the 3 manufacturers that we buy for, we're actually expanding their distribution. And also exposing their brands to, if you take, David and Michael are here from Embraer and Bombardier, one buyer per one aircraft. Depending upon the model, I'm exposing 8 to 9 to 10 people per aircraft that they come into at Flexjet. So that's why Michael and David are so nice to me. But absolutely.
Okay. You've promised to make everyone upbeat and cheery.
Yes.
What's your 2020 outlook?
2020 for us at Flexjet is incredibly positive. Number one in the U.S., we continue to expand. 2019 was a record year for us. 2020 will see us launch here in Europe. And there were a couple things that came up this morning that I would tell you I think are incredibly positive trends for large fleet operators around the world. Number one, we are absolutely in a pilot shortage. And so I think someone like Flexjet and the large operators who can attract and create a compensation plan and a work environment where the really good pilots want to work, we have a distinct advantage. At Flexjet, we created a very innovative program called Red Label, where we have dedicated crews to a specific aircraft. So we actually get as close to possible as whole aircraft ownership in a shared economy model like ours. So I think that's one of the significant positive trends for us. And if you think about it, fractional ownership was the original shared economy. So as companies look toward absorbing all these large cabin aircraft, David put up a slide this morning that 50% of the deliveries in the next 10 years will be large cabin. And I think that really speaks to the opportunity for a shared provider like Flexjet for someone to access that macro fleet on a shared basis as opposed to owning one.
Why are you coming to Europe now? You know, there's still a huge amount of
everybody's so positive about Europe right now. That's why we're coming. No, I think it's time. I think for us, we solidified our base in the U.S., and it was a combination of our growth into large cabin, and Europe is the second largest market in the world, so that's why we're here.
Don?
I mean, you know, 2020, everybody's waiting for the other shoe to drop. I mean, we heard that pretty succinctly this morning. If you look at recessions, at least the 3 or 4 in my lifetime, they're very sharp, but they're also very quick. They're over, you know, you look at 2008, 2009, we went from a 13,000 point Dow to 7,000 in round numbers, and then back to 10,000 a year later. So, you know, we had, and then it's been growing ever since. So we think there's going to be a correction in the market, in the stock market in the U.S. at some point. There's probably recession around the corner, but not enough to slow us down. Matter of fact, I titled our sales meeting this year, Double Down. We really believe in that this year. As I know everybody thinks that corporate aviation is under attack, and I don't want to be silly and not recognize the problems in front of us, but let's never forget it's still aspirational. People want bigger airplanes, they want faster airplanes, they want nicer airplanes. One of the great things about the fractional business and the kind of globally branded operators is they've introduced people to aviation at an unbelievably high level. You know, it's not where I bought a King Air and then I buy a Beechjet and a Hawker, or you know, whoever's product line they come up through. They're starting out in Challengers and Gulfstreams, and so I don't know. I'm pretty upbeat about this year. We think, and the first results are in. It's pretty good.
Okay, nice question from the audience. Do you see an increase in fractional versus straight jet ownership amongst younger people?
Yes. I think there will always be, as Don said, significant appetite for whole aircraft ownership. I mean, it's the ultimate to own your own aircraft, to have it waiting for you at your point of departure. So that is incredibly, as Don said, aspirational. But if you think about the younger generation, I don't think there's a lot of millennials in this room. Someone mentioned before, no one wants to, own a house. Everything is shared. It really does play into a shared economy. And again, fractional was born 35 years ago. It is the ultimate shared economy. And as Don just mentioned, we are bringing people in at an incredibly high level of service. We're bringing them in, they're entering in with large cabin aircraft with impeccable service. So they're not starting on the way up and starting on the way down and moving up. We're bringing them in at the top.
Okay, Don, business jet market does not like uncertainty. Do you see any impact of US elections in 2020?
Is it this year, the election?
Has it started?
I hadn't noticed. I remember speaking here in 2017 and saying, in the beginning of 2016, I told everybody that worked for us, we better make hay while the sun's shining, guys. Go out hard in the beginning of 2016, because the last time the business slowed down was 2012, and what we thought was a kind of a crazy election. Well, then you introduced the all-time craziest election, and business grew right through it. I don't expect that to happen again. I think uncertainty is the thing that is the enemy of all of us, is the sort of indifference or uncertainty. But I think that, I go back to, at least on the brokerage side of the business, if people are getting out of airplanes, we're still selling airplanes. But I don't think it's going to slow down completely. I think the thing that's going to change for everybody is if a recession really does happen. And it's going to be short. So,
do you worry about the election?
No more than anybody else in the room. I think for us in the U.S., it's of course a lot of noise, and no one does like uncertainty, but you just have to power through it. So I have a lot of other things to worry about. I'm trying not to worry about that.
Okay, here's a cheery question. 7,000 new deliveries in 10 years, that's the forecast, the consensus forecast from David. How many will be scrapped?
That's a great question. I remember saying in 2009, there's a good chance we built enough airplanes in the previous 5 years for the next 5 years. And I might have been off by a couple of years. We clearly overbuilt then. You get the sense now with, 700, I talked to Rolly this morning, 700 some deliveries. I don't really see the impact of the airplanes leaving because of the regulatory issues in the US. Something like 2,000 to 3,000 airplanes will be, aren't going to make the mandates, but they're not the ones that people are really flying anyways. So I don't think it's going to have that big an impact. The metrics that I look at are flying hours, which in the US are up a little bit, and here they're down a little bit. So it's pretty stable. That's a metric that I care deeply about. The other one is how many airplanes are coming into the marketplace and how many are leaving. And clearly we got more coming in, and airplanes are flying less. They have same number of hours, got to be divided up against, around less airplanes.
What metrics do you track?
Flight hours for sure. That's the ultimate metric, as well as transactions. So transactions give me a sense. So for instance, last year, our new transactions were up 28% in the US. My revenue hours were up 15%. So that tells me my revenue hours in about a year are going to be up about 25%. So that kind of gives me about a 12 to 15 month forward look.
Okay. Question about empty legs. We've been talking about the debate. Large fleet operators tend to have more empty legs than, say, a corporate flight department. Would you agree with that?
I would.
And what can you do about it?
Nothing. So if you think about the model, our model, we do fly a lot of reposition legs. And so that is inherently what we do. We are on call in the US to pick up anybody in the lower 48 states within 8 hours notice. So to be able to execute on that, you have to be able to be in position to service your customers. So to the extent that that's inherent in a shared model.
Okay. What has Flexjet learnt since the last European attempt? What changed in the marketplace? Obviously, the management team and changed, the owners changed.
Yeah, I wasn't here for the first attempt, so I don't really have a frame of reference. I would tell you as a company, we've been very thoughtful and I would say prudent and patient about our entry into Europe. We have strategically purchased some sister companies, Private Fly, as well as Serial Management in Milan, and I think that's given us great insight into the marketplace. And of course, we're excited this year to kind of officially launch Flexjet Europe.
Okay, is there a market for refitting older large cabin jets into higher configured planes for corporate shuttles?
Sure, that's one of the things we're doing a lot more now is first-time owners. It's hard to call somebody that had 200 hours of Flexjet a first-time owner when they go out to buy a whole airplane, because they're very savvy and sophisticated about aviation. But the last, I'd say 24 months, we've seen the first wave that I've been looking for forever as an OEM guy and then as a broker, the first wave coming out of the fractional business. By the way, the healthiest thing for everybody in the room is fractional, and the other operators continue to grow. It's just more people introduced is just better for us. But we do see people coming out because of the values are now at a historical low and refurbishing airplanes. And they're buying 7-year-old airplanes and refurbishing them, spending $20 to $30 million. And that's a first-time buyer now that's sort of normal.
And by the way, we're all passionate aviators, and so to the extent that I lose a customer up the food chain, he leaves me to buy his own airplane, I just congratulate him and let me know how I can support you in some supplemental way.
Okay, do you see other models that Flexjet will get into? Jet cards, obviously you have sentient already, or eVTOLs, or supersonic.
Well, we are the launch customer for the AS2.
How's that going?
Actually, I would tell you, Tom Weiss, who's their new CEO as of 2 years ago, and their partnership with Boeing has really, this airplane is going to fly. They have got some significant partners. They have great backing, and the airplane's design has evolved, and so we're excited to be their partner. And I think first flight is 2025. So stay tuned, Ali. I'll be here in 5 years.
And the plan is to have that charter largely rather than fractional?
To be determined.
Okay, but mainly flying New York, London.
Well, I don't want to steal anybody's thunder, but they've created a rather very unique technology where they've attenuated the sonic boom over land. So they've been able to really perfect, so possibly New York, LA.
Okay. Do you think there should be other alternatives to outright ownership and fractional?
Well, there is. I think the models, I applaud our industry's creativity with regard to certainly charter and some of the membership models and some of the shared ownership models that have come through. I think the more people, all of us in the room, can get people flying on corporate and business aircraft, the better off we'll all be. So I applaud them all.
Okay. After ADS-B, what is the next mandate that will force aircraft into retirement?
It's just economics.
Economics.
It's always economics. Even ADS-B is, do I spend the money to make the airplane more capable? There's a low end that's just going to go away. They're lasting longer than we thought, and that's good and bad. It introduces more people to aviation. But it's also contributing to this, airplanes are flying fewer and fewer hours. If you looked at the average corporate airplane, kind of the super midsize and above, I'd say the average probably flies 25 hours less than even 5 years ago. And we know that from all the kind of fleet planning we're doing, and we just see it more. We rarely saw corporate airplanes flying 275 to 350 hours, and now we do see that.
Okay. Anyone want to ask a question with a microphone? Okay. Is there a trend that more owners are putting their aircraft into the charter market, would you say?
I would say no. I think more owners are putting their airplane into management companies, which I applaud. The idea that you can have the same, economies of scale as a one airplane owner doesn't make sense. I think, we always talk about metrics, and I'm lucky I get to talk to the guys that run these big companies, and they seem to be happy with the amount of flying hours. My customer base is more reflective of Mike's customer base than somebody that flies a $3 million Hawker. So, yeah, no, I think that's... Okay.
A nice comment, the shared economy in many areas such as housing is because many young people can't afford to buy now, ... Here's a nice one. How do you counter the false representations that some brokers use promoting the real costs of running a business jet?
Well, I built a transparent business. My brother and I did. We built a very transparent business based on here's your total cost of ownership. And I love to say, Mike's heard me say this a million times, I've never talked somebody into buying an airplane in 30 plus years of doing this. I've helped them decide which is the right airplane for them to buy.
Which was always a Hawker.
Well, it used to be, and look where that got me. The fabulous experience. No, I think, they're, first of all, if you really are going into the private jet business and owning a private jet, and you don't go find the real cost of ownership, shame on you. There's a lot of information out there, so.
Okay. Is it commercially viable to do less than a 1/16th share?
In terms of fractional?
Yeah, I think.
The rule of thumb, broad brush, broad strokes. If you're flying, 0 to 10 to 15 hours a year, you should charter. If you're flying about 25 or so hours a year, you're probably really well served in a jet card. Somewhere between 50 and 250 to 300 hours a year, you're in exactly fractional sweet spot. And above 300 hours a year, depending upon the mission profiles, and if you have different users from different locations, at that point, economically you ought to consider at least investigating whether it makes more sense to have your own aircraft. And again, those are incredibly broad brush strokes depending upon each individual's mission profiles, but that gives you some sense of where my head's at.
So when you place an order for an aircraft type, so last year we saw you order the Praetor, and we've seen you at NBAA. How quickly do you know if it's going to work or not?
Well, we placed an order in October at NBAA, and we took delivery of our two first new Praetor 500s in November. So in that case, pretty darn quickly. And one of the significant things we're doing with the Lear 75 this year is we're bringing that airplane over to Europe. We feel like in a light jet category that the Europeans will appreciate the quality that Bombardier offers in that class of aircraft. So again, we feel like we're kind of picking the best airplanes that we feel will serve our customers' missions the best.
And when it comes to negotiating orders, how long do you spend? You already working on next year's one, or?
Well, boy, we've made some big decisions here in the last 5 or 6 years. It depends. I would tell you that the 3 manufacturers that we work with are really, for the really good people. And we've developed relationships with them. For the most part, we're either their first or second largest customer in the world. And so they pay us that respect. And we try to be respectful customers of theirs. So, it takes a while, but the relationships that we've built over the years kind of lay the foundation. And then we really, really try to make sure that we're doing the right thing by them as well.
Okay, I'm not going to ask you what discount you look for on list price, but you clearly get an economy of scale, and you give OEMs certainty of production or some certainty, that they can do. Don, would you rather, when you're looking at models and advising your customers, how do you view large fleet orders? Are they positive? Because it guarantees that manufacturers are going to get through a lot of aircraft?
Absolutely.
Or is it negative?
So it's absolutely positive, with the one caveat that, if I had to say one thing that got more difficult this year, it's the service center network. That there's a lot of airplanes out there, and getting airplanes in for pre-buys, for regular maintenance, for inspections, et cetera, got harder this year, not easier. And as more airplanes enter the fleet, I think that exasperates that. But no, you get a large order, or you give a large order to a manufacturer, it gives them stability, it gives them a reference point to how to keep the airplane running a lot. So we view it as very, very positive. We'd never shy away from an airplane because it was the
And you
large
don't worry about that eventually those aircraft are going to come on the market with a much higher hours, or?
No, because they're almost too, it's a bifurcated market, and we take advantage of that. We buy the airplanes coming out of there. We like, you could take a 10,000 hour airplane and say you got great pedigree. It sounds mutually exclusive, and it's not, or diametrically opposed, and it's not.
Okay, final question, unless we have one from the audience. Nice and easy one. Are there too many aircraft manufacturers?
Don?
There's too many brokers. Listen, Hawker Beechcraft went away. My life's work went away, and nobody noticed. Nobody sold one more airplane because Hawker Beechcraft went away. You've got a very crowded landscape in the super midsize right now. I don't think you have a problem in the light jet with really 2, now maybe 2.5 players. But you the guys there are doing great work and a great job. Super midsize, it starts getting crowded. There's probably one, maybe even two more, too many entrants. It's an interesting market in that the market leader is also the price leader. You don't see that often. So that's, the one that sells the most, builds the most, is also the price leader. So that's tough in that space. In the large cabin, I'll probably answer it this way. I don't know if it's manufacturers or it's models. And for 20 years, all of us that have been in this business, you could spend, depending on the economy of the time, between $40 and $50 million in round numbers for a 550, 7X, or a Global. Well, now the 550, which they're still building, is the fifth airplane price-wise in the Gulfstream lineup. The $50 million would, the 500, which round numbers, a $50 million airplane, maybe a little less, is the fourth airplane in the lineup. So is that dangerous? I mean, we love the airplanes in that segment. We like the ones above them, but there's a lot of competition north of $45 million, and that, it feels crowded to me.
Mike, OEMs are putting a lot of their resources into larger aircrafts, and you buy big aircraft, but not as many as you buy. Do you agree with their decision as you buy mid-cabin and light jets? Is that because that's not a fractional market, or do you think their forecasts are wrong?
Well, up until now, if you look at the metrics, again, we talked about metrics, and if you look at the hours flown in different categories of aircraft, you would say that the large cabin has been the smallest. Historically, somewhere between 15 and 18% of all revenue hours flown in our industry would be in large cabin aircraft. So, but the world is getting smaller, and you can't fly across the pond in a light jet. So, and we have seen our customers, a lot of what we call concept buyers, first time to private aviation, enter the space in mid and super mid aircraft. Whereas 25 years ago, they would have come in with an S2 or a Citation 2. And so I would tell you the consumer today is coming in at their first level of aviation at an incredibly high level of asset. And so maybe Bombardier and Gulfstream know more than I do about that. So I'm encouraged because we'll buy a lot of them.
Final question. It's 10 years ago. It's just over 10 years since we saw OEMs peak with 1,200 jet deliveries. What year will they get back to that?
I don't think it matters.
No, it does. It's a question. What year will they get back?
Well, let's do the math, right? Wasn't the math 7,000 over the next 10 years? Well, it'll be after 10 years then, because 10 divided by 7,000 divided by 10 is 700 a year. So,
which is about where we're at now.
Okay.
But this is I think when I say it doesn't matter, I think, for how many years after 2008 did some of the veterans in the room go, it's a changing environment. It's changed. I mean, 10 years later, it's 12 years later. It's just, and it's a good reality.
Okay.
So,
but it will get back.
It's exactly where it should be.
And on that, Fudge, thank you very much. Thank you. That's great. Thank you.